Good afternoon, guys. This is Enda here. This is the weekend video. I didn't get to one last week, so I thought I better damn well do it this weekend. All right, it's Friday afternoon, evening time here. Market is well up and running in the States right now. And by the way, this weekend is a holiday weekend in the States, so there won't be any update on Monday because there's nothing happening, obviously. Okay, so this is the 4-hour chart, euro dollar. Let's get euro dollar. Let's get into it and see where it leads us. Okay, this has been an interesting kind of acceleration to the downside. You could call it that. We've hit support at well, no, we haven't. We've broken support at the previous wave 1 low, so that'd be 108.77 or so. The current main wave count calls for let's say a corrective rally back up towards that maybe as high as one. Let's get into this. Hold on now. I don't want to say something that it's untrue. Yeah, maybe as high as 111, possibly 111.70. But the alternate count would allow for a larger rally up to about 114 or so. Yeah, I still can't call between the two because I just don't have any. There's been nothing in the action, even though we haven't had an acceleration down to the downside. There's been nothing in the action that has pointed me towards or against, let's say, the alternate count here, which could allow for a larger rally. And we have reached a momentum extreme to the downside, which we haven't hit for, let's say, over 5 or 6 months now. So last September was the last time we hit these levels on the 4-hour chart. So I do expect a corrective rally, and we're still not out of the woods on a possibility of a rally up to about 114 in a possible wave C. So let's get into the shorter term chart, and we'll see how this might unfold. We're kind of inching higher today, but it's been nothing substantial. We still could have a 3-wave move down in wave B, or we could have a 5-wave move down in wave 1, or close to a 5-wave move in wave 1. So both counts are still pointing to the upside for the medium term, so the next week or maybe 2 weeks or so. 3-wave pattern is the initial kind of let's say best pick or best choice at the moment, or the easiest choice at the moment. So an ABC retracement back to about 110.95 at the previous 4th wave, and that would give us wave 2 at least. And the action then off that would dictate whether the alternate count is allowable or not. I reckon if we got a break above that 111.70 area, then we would probably head higher in that C wave. But we'll just have to deal with that when that comes. Okay. Pound dollar, I think we're still kind of grinding to the sideways in this now expanded flat. An expanded flat wave 2. We have 5 waves down in wave 1, and we seem to have an A, B, and ongoing C wave in wave 2. So that's kind of still the outlook for the moment. We've had a rise of the last couple of sessions. It hasn't taken out any of the previous highs just yet. I would expect we should reach up above that 132.80 level to take out that wave A high, and we'll get onto that in the short-term chart here. You can see that the wave A high here, 132.80. So I think wave C should break that, and if it doesn't, then we're going to have to rethink what's going on here. But for the moment, I think, yeah, 5 waves down in wave 1, A, B, C pattern in wave 2. I know it's kind of a mismatch at the moment between the size of wave 1 and the size of wave 2, but that's just what's happening. So I'm just dealing with it as it comes. So early next week, we should see a completion of this C wave here. we seem to have hit off kind of this initial kind of swing high here at 130.70 and fallen off that early or in the early trade today. Let's see if that picks up this evening. We should know as the UK is kind of rolling or winding down now, and as the US picks up. Yeah, I did want to see a kind of a solid break through that 130.70 level and a challenge of that 132.08 level before the end of this week, but I'm not sure if that's going to happen now. I mean, this could be a series of 1-2 waves. We could be getting 1, 2, 1, 2, 3, 4, and then 5, which would be a third wave, and then a fourth and fifth wave. So wave C should be in 5 waves. We should break out above 132.80 complete. But let's deal with what happens in reality early next week. But I'm still looking up. This decline still looks corrective enough. And if we retrace above that 130.70 level again by this evening, I think we should be on track to head towards those higher highs to complete wave 2. Okay, dollar yen, we still look like we could correct a little bit more, but the larger term chart or longer term chart looks reasonably solid at the moment. We have a very large triangle. You can see wave A, B, or sorry, but it starts even higher than that. So daily chart. A down, B up, C down, D up, and E possibly at the recent low there. So that would be about 107.50 or so. And once that triangle finishes, then we were expecting a rally. So we got the rally. This should be a wave 1 and 2, and we've kind of retraced a lot of that decline there in the second wave. So there's the second wave here. That's the low of the triangle. So wave 1, possible A, B, C with an extended C wave, and then a nice 5-wave move off that again. Now there is a couple of ways you can view what's happened over the last few days. It's been corrective, no doubt. Still a possibility that it's a second wave. It could be an A with a triangle, B wave, and then C. It could also be a possible wave 4. If we were to move this wave 4 here, it could be wave 4 of 1. So we may even be looking at let's say a higher wave 1 to complete, maybe next week, and then we correct into wave 2. But there's no way of knowing that right now. The range is contracting. It's looking like a triangle. For the moment, I'm going to go with a possible triangle B wave with A wave down, so A, B, C, D, maybe E in here somewhere, and then a C wave decline early next week. And that would still make us give us a 3-wave pattern and a correction complete, and then we should move up into wave 3. So we're kind of, we're in corrective no man's land again. We'll just see how it kind of traces out over the next day or two. We should know with more certainty on what's going on. And initially, I would like to see a break of that 109.50 level in wave C. We haven't got there yet. And we have kind of a previous 4th wave here. This kind of, let's say, a shoulder of support there at about 109.15, 109.20. So between those two levels should offer a little bit of support for wave C, and we'll see we'll see if wave C can stop. If we will see if wave 3 can begin off those levels. So short-term decline, longer. Sorry. By the end of next week, we should be rallying, I hope, in wave 3 again. Okay, Dow is, again, we're kind of in that kind of ending scenario again, which we have been so often in the last while. The machinations of, let's say, the willingness to speculate and the Fed's inability to stop poking that willingness to speculate has pushed us, higher and higher. We're still trending within this trend channel for the moment. We should be closing out, coming to a close of this trend channel move, and we seem to be kind of hitting the brakes on the rally at these levels. So the price doesn't seem to want to rally above that 29,500 level any more than I want it to, but that doesn't mean it won't. Hey, this final fifth wave here, if I can show where I'm coming from, I'm looking at a wave 1 here, a wave 2, and then this would be a third wave, would be wave 1, 2, 3, 4, 5, possibly 4, and then 5. That's one way of looking at it. You can also view it like this: wave 1 and 2, and this could be 1, 2, 3, 4, 5, wave 3, 4, and 5 ongoing. A couple of different iterations, I think, is the point I'm trying to make here. These internal corrections here, they all look like possibilities or candidates for fourth waves. So which one of those you pick as the fourth wave within wave 5 is kind of up to yourself. We'll see how that goes. If we get, we have at least with the kind of creation of those fourth wave lows, at least we have levels to which we should be looking at to see if this market is beginning to turn down. We have a fourth wave low here back in August. Is that August? Or sorry, no, early January. Fourth wave low here. Fourth wave low just slightly above it. And that's all kind of clustering around the 28,150 level. So that 28,150 level seems to be quite important. And we have a little shoulder, left-hand shoulder here at that level too. So below that, you would pick the previous fourth wave. So that would be 27,300. And those probably offer pretty serious support. And I do note again that this 27,300 level does mark around the top of the previous triangle. So we've got wave B high, a wave D high, and a wave 4 low, all at that 27,300 level. So that's kind of another shoulder, left-hand shoulder of a head and shoulders pattern. That's 28,150 level. We have a left-hand shoulder of a smaller head and shoulders pattern. So there you have it. That's the important initial level of support would be 28,150 with 27,309 or 300 below that. You can see that I'm kind of indicating a possible wave 1 down into those levels, and then a lower high right hand shoulder in wave 2. So let's get into the short-term chart. I'm marking this wave 3 and 4 of 5 in green, and we have a kind of a prolonged sideways correction over the last few days. This could be a triangle. I had marked the wave 4 low here at back at last, was that Monday's low, and the rally off that can still be viewed as wave 5, but it could also be viewed as a large triangle. So it could be A, B, C, D, and E finishing right now, or this evening, or this afternoon, and then we get a rally in wave 5. The upper trend channel would probably be hit up at around 29,950 or so now at this point. You could also view this kind of contraction in range here as a possible triangle within wave 5 itself. So this could be wave 1, 2, 3, A, B, C, D, and E in wave 4, and then wave 5. So it could be a triangle within wave 5 in pink, or it could be a triangle within wave 5 in gray. We should know pretty soon, and both of them point up for them short term. We should see a blip up towards 20, let's call it, split the difference, 29,800 or so, and that would be wave 5, and then we'll be looking for an impulsive decline next week again. So unless that rally happens before the end of the day, towards the close, well, if it doesn't, it'll probably just be put off until Monday, and then we'll look later on in the week for some sort of decline or impulsive decline to begin. Okay, first level of for the initial level of support that I'm looking at is that 28,120 level. Okay, let's get on to gold for our chart here. Still kind of on the fence between a triangle wave 4 or a running flat wave 4. It's impossible to know, but both wave counts would call for a rally in wave 5 of 3 over the coming couple of weeks. We're moving higher today, which is good. Let's see if we can take out this the internal highs here of this B wave, and we'll get into the hourly chart in a minute. For the moment, we're still looking at a possible triangle wave 4 in green, and then wave 5 still underway, with the recent correction being a fourth wave triangle or running flat. It's hard to know. You can see here I'm marking the triangle idea for wave 4 in blue. So we've got A down, B up, C down, wave D up at that 1576 level, and then wave E into, what was that, yesterday's low, Tuesday's low. And we're kind of moved reasonably higher off that level. So today is a rally. We've moved above 1576, which is good. I'm looking at this previous B wave here, and that's 1592. So wave 1, I would like to see break that 1592 level. If not, above that previous wave 3 high. So if we did get a break of that previous wave 3 high, that would suggest that wave 5 is underway, and we would look for a corrective lower high in wave 2 before the rally, the main portion of the rally began. And wave 5, if we go into the hourly chart, wave 5 here in green has a reasonable chance of pulling us up to about the 1700 level. So we're still looking pretty positive for gold, as long as these internal highs, or these internal higher lows can be contained, or can hold. I am looking tentatively at a possible further elongation within this triangle. If we don't get a break of that B wave high, well, then we could call this high wave D, and then we'd fall again in wave E. But even in that case, we should keep the higher low theme going before rallying then properly in wave 5. Okay, so next week is looking reasonably positive for gold, and we should get wave 5 underway. Crude oil. I introduced a possible alternative yesterday, which kind of expands this third wave here. I'm not 100% not so sure about it, but I'm kind of entertaining it for the moment, because the corrective action to the upside that I had been anticipating has not materialized. Well, we were correcting to the upside, but I was anticipating a little bit more up towards that probably 55.50 level, but it doesn't look like we're going to get that. You can see here this first wave 1 down, and that took us down 66 to 50, so 1600 points. So the minimum you would expect for, well, we're actually there now, for wave 3 would be, let's say, if we got a Fibonacci extension of that, more or less. We put it down here, so wave 3, we should be pushing down into the 41 level to complete wave 3. Well, if this is wave 3, well, more power to it. We should continue lower. It doesn't derail the wave count in any sense whatsoever. I mean, I was expecting this large decline to come, and we've got this large decline. The only question is at what degree is this correction? I still believe it's a correction. I don't believe it's a bottom that's forming. For the moment, anyway. and I think we'll probably retrace more. I would like to see, obviously, there'd be no harm at all to get down to those 40 levels in CRUDE before correcting anyway higher again. And even if we do get down to those 40 levels, we should hold below that previous wave 1 there at 50.74 as wave 4. Let's say wave 3 completes down around that 41 level. Let's say wave 3 completes and then we get a correction in wave 4. Well, then wave 4 should hold below that 50.70 level, so it'll be like a corrective grind again to the side. So anyway, short-term charts, let's get in there and we'll see how this correction is unfolding. There's that alternate count for wave 1 down, wave 2 up, around there. Extended wave 3 maybe, then ABC wave 4. Yeah, I'm not against that at all. We'll see how the action goes next week. I was expecting a run up into that upper trend channel line this week, and we seem to have got that, and we seem to have got 5 waves as well. So possibility of wave 1, expanded flat wave 2, wave 3, maybe a triangle wave 4, and today's kind of blip higher has been in wave 5. We've gone up and we've touched that, broke above that 52.28 level that I was pointing out at the wave A high, and we seem to be correcting off that level again. So we've hit trend channel, we've hit the minimum target. I did want to see push up maybe towards that 38 retracement or the previous 4th wave there, 54, but that's not looking likely right now. But anyway, if this alternate count is correct, then we should see a fall down below, let's say 44 or 43 over the next couple of weeks. If the current wave count is correct, well, then we should see a fall. Wave 2 complete and wave 3 down begin. So for the moment, we're still working on a correction, and I don't think it should break any higher than, even if we do see a further pop to the upside, I don't think it should break any higher than that previous 4th wave there, that 54, 55 level. And then we should turn lower again. So for next week, still looking for this correction to end and decline to begin again. Okay, so let's get into the S&P. S&P has again, we're after rallying and pushing out to a further extreme in momentum to the upside. In that, let's say that's wave 3 of 5. Excuse me, I'm yawning. Everybody's going to yawn now across the world. Wave 3 of 5 hit the peak momentum there in MACD. And then as the price is grinded higher, we have created a lower high and we're diverging lower on 4-hour momentum. We're already diverging lower on daily momentum for the last while, since the middle of January. So 4 hours starting to go that way also. The hourly is already down off the highs, which were recorded back at the beginning of February, so first week of February. We're diverging on 3 degrees here, the daily, the 4-hour, and the hourly. Yet the price is kind of still marching higher. We have all the signs of a top psychologically, in terms of leadership, in terms of internal market dynamics, in terms of wave count, in terms of all, a myriad of technical indicators. If you're looking at Hindenburg moments or, new lows, new highs, or the narrowing of that leadership within the rally, it's all pointing, and specific manias within certain stocks. I mean, you can point out Tesla, you can point out Netflix, and those. Tesla was it should be the poster child of bubble economics. I mean, that company will probably never make money, and it's going to lose a lot of money for a lot of people coming up over the next year or so, a couple of years, as this bear market really grabs its teeth in. I don't know how anyone could buy those shares, but that's That's me and that's them. Okay, well, like everything else, it's been just a momentum trade. So the algorithms are programmed to buy at certain levels, they're programmed to sell at certain levels. That's why the rally has been so strong for so long, and that's why the decline will be so strong for so long, because those damn algorithms are going to take control of the decline also. So they are. So those people that are cheering the rally because of this, let's say hands-off investing, or ETF investing, or algorithmic investing, they're going to be crying, gritting their teeth, because those same algorithms are going to crush people. They're going to crush funds as well in one hell of a major fashion. But anyway, enough of that cheery talk. The short-term count pointing to a top somewhere up around that 3,400 level, where wave 5 might touch that upper trend channel line again. We've got a kind of a confluence of trend channels here at different degrees. We have the trend channel here around surrounding wave 5 in blue. So you can see that here. That's meeting the trend channel in wave 5 in red. So wave 5 in red is meeting that trend channel here. So let's actually extend that to create that meeting. So the upper end, you would be talking about 34.46 on this upper trend channel, or the largest trend channels. Let's go down a level into the hourly chart. You can see that there's trend channel here around wave 5 in green is meeting that trend channel here in wave 5 in blue. That kind of points to, if we were to extend that trend channel, that points to somewhere around 34.40 again at the lower degree. And the two trend channels here in wave 5 in pink and wave 5, let's say, wave 5 in pink, I haven't got. I should create this trend channel. That's pointing higher, but, well, depending on how you count that fourth wave, that's the envelope. That's pointing up to about 34.27 as a high. So we can see different trends meeting higher trend channels, pointing to resistance in a fifth wave. So still allowing for a little bit more upside up to about that 3,400 level, where we touch off those trend channels and we start to see some reversal here. So we have a fourth wave low at 3,300. We have a larger degree fourth wave low at 3,214, and the next degree, let's say that the next most interesting would be 3,180. That's internal fourth wave, and then we have another correction low here about 30.69. So a significant amount of supportive levels that could be taken as different degree necklines within a head and shoulders pattern. Most important one obviously is at 28.54 down at that previous fourth wave. But the trend change should take out those support levels with a bit of ease, and we should start to see those levels becoming resistance. Okay, for next week, if we don't hit those highs today, later on in the market, later on in the trade, it's not looking likely. That'll probably be postponed until early next week, until we finish this wave 5 in pink, and then we start to turn down again. So next week I'm looking for a turn. Silver, we're looking at a second wave, although the extended nature of this sideways correction has been. It looks as a possible triangle. It looks like a triangle. It's contracting like a triangle. It's taken a damn long time like a triangle. But we shouldn't have a triangle within a second wave, and that's the kind of crucial point at this moment in time. Hence the reason I'm still counting a possible second wave here. with the expectation for a rally in a third wave, which should push us out above that 1960 level pretty easily. We have the 1886 level there at the previous high, so that'll be wave 1 high. This will be the wave 2 low, so we should be working hard to begin a third wave over the next next week. And if we look into the short-term chart, you'll see that I have a possible 1-2 pattern. This is 3 waves down, and we're moving off that low again. Nothing conclusive, no acceleration higher today. So there's nothing really to go on right now. We didn't get a break of that 1787, so that's the interim high like we did in gold. We got a break of that interim high in gold. 1787, if this is wave 3 beginning, we should push out above that pretty early next week. And we should take out that 1809 high there at the wave 1. And actually, we should take out that 1834 level pretty quickly if this is wave 3. So for next week, I'm looking for those lows to hold, most especially 1737. I don't want to see that alternate count triggered. But you know, the market's going to do what the market's going to do, and I'm just going to have to adapt to that when that happens. But tentatively pointing upwards, that's what I'm looking at. And the opposite on bonds, tentatively pointing downwards. But you know, the strength of the rally recently is it's annoying. First of all, the initial emotion or take on it, but it's worth watching that this could still be a corrective decline, especially if we get a significant sell-off in the stock market. I mean, people will probably just ring that Pavlovian bell and go straight to bonds again. So we can't rule that out at all. Okay, so for the moment, looking at a possible wave 1 and 2, maybe an internal wave 1 and 2 at lower degree in wave 3. So if we begin to spill lower early next week and we take out that wave 1 low, that 130.20 low, then we'll look at the idea of a third wave decline in bonds. Again, we've got a lot of support built up over the last rally. So we've got that 130.18 level, 130.20 level, which marks the low of wave 1 and the high of this internal C wave here. We've got that lower degree B wave there, so that's 128.52, and that's pretty much the closest that we're going to get to an early signal. If we get a break of that 128.52 level, obviously a break of 127.88 would be good. It would push down. That would increase the odds dramatically of a third wave decline. But we're just working with what we have here at the moment. We've got a decline. Let's see how this pans out. Okay, and I'm yawning again. Thanks for being with me throughout the week. I wish you all a blessed and a happy and safe weekend, and we'll see you again Monday. And we do it all again. Have a great weekend. God bless. Godspeed. Be good. Bye-bye.